Hi everybody, it's Jared Johnson from Day Traders FX. How the heck are you this afternoon? Okay, here's a couple of thoughts I had today, and they go as follows. Is the market giving the Federal Reserve the middle finger? Maybe, just maybe. And why do I say that? Why do I say such a horrific statement? Well, because I think it's actually happening. I think the market is actually just not giving a crap about what the interest rate hike situation might be this coming week. Maybe it does, maybe it doesn't, but I'm starting to see some writing on the wall here that's making me think otherwise. Again, this is Jared at Day Traders FX. You can stop by and see us at the website. We'd love to hear from you. Let's get down to a couple of charts that I think are key. The euro, of all currency pairs, and definitely nothing personal to anybody that lives within the eurozone, the euro looked like it was basically getting flushed down the toilet. It's making this very interesting comeback. Here are a couple of things that I look at. This is a weekly chart on the euro dollar. This high from 140, can we believe that it was at 140 not that long ago? High of 2014, to our low of 104. The euro has made this big bounce back and has been playing around in this channel for most of the year until just a few weeks ago when it broke out of this channel, ran down 500 pips. Well, it has retraced that entire breakout 100% out of the channel, that is. It failed to make a full double bottom, and it definitely did not make a new low. A couple of things to look at. Here's another thing to look at. Fibonacci levels. When new highs and new lows are not made, Fibonacci levels become very attractive points for the market to get back to. In particular, 118 on the euro dollar, 38% fib, 118. Is that a ridiculous claim? Maybe. It's 800 pips higher than current market price, but I think it could get there. And the fact that we have this not double bottom and not lower low and a possibility of a run back up into this 38% fib makes me wonder if the euro just doesn't care. One trade that we made some pretty good money on was this huge falling wedge that we had right here, and then Europe came out and said, things aren't as bad as we thought they were, and the euro ran up 400 pips. Well, from there, it consolidated and hung out just a little bit for several days, made us all think about it, and then it's broken out from there, and it made this nice bull flag movement higher. It doesn't look like there's a lot of things in the way just yet on euro dollar, but we do have some good resistance levels up here at 111, 112 in that general area. But I just can't help but look at this big long-term chart and think I could see the euro dollar heading up a lot in light of and just ahead of this interest rate news that we have coming for the U.S. Where's another good example of some of this? How about the New Zealand dollar? New Zealand dollar, here's a nice little move right here. New Zealand just cut interest rates. Literally about an hour ago, they cut interest rates. And yet the New Zealand dollar rallies. What do we see happening on the New Zealand dollar? Well, we very potentially see this kind of a situation right here happening. Do we possibly have an inverse head and shoulders pattern? It's kind of starting to look like it a little bit. It looks like there might be some of that in the works. That's a pretty good looking head and shoulders pattern right there. We've got a little bit of a crazy neckline, but we haven't. That's not something we haven't seen before. And so it makes me wonder: is the New Zealand dollar going to make this kind of a big move? And here's one thing to bring up about the New Zealand dollar and the euro dollar and all these pairs is we see trends very oftentimes last for about a year and then they reverse. Now the New Zealand dollar has gone a little bit longer than that. The New Zealand dollar ran down from basically July of 2014 was the high, and it bottomed out about August of 2015. So basically, actually, just about a year. So about a solid year of downtrend, and then it's been making highs, and it's been making this little inverse head and shoulders pattern. Euro dollar, same type of situation. Here's our high, May of 2014. Here's our low, March of 2015. A one-year downtrend, and now it's about time for these things to start switching and flipping and moving higher. Not the most uncommon thing on the planet to have happen. So that's one thing to keep in mind. I'm also just keeping an eye on another pair that may trade towards some dollar weakness, and I think it's the dollar yen. The dollar yen has this fantastic head and shoulders pattern on the weekly chart. That is just so beautiful. And if this thing breaks, we could see movements upwards of 8 to 900 pips down here and trade this all the way down into 10, 106, 107, 108, down in that general vicinity if we get a really decent movement here. And so I am really starting to question what I think about the US dollar rally. I'm definitely not off the bandwagon, so to speak, but I just am seeing the signs, and it's making me wonder if the market doesn't care about an interest rate hike at all, if it's too priced in now, because there still is some skepticism whether the rate hike is going to happen or not. But is it too priced in? Does the market not even care about it anymore? That's the big question. We're going to find out early next week, but I'm starting to see a couple of big signs and big tails that are going to make me seriously question this myself. Happy trading, guys. Good luck.